In terms of drawing up a broad picture of the Indian economy, it is useful to start with the perspective on now growth for FY22 as far as NSO's advanced estimates for the full year are concerned, it is put at 9.2%. This does not take into account the impact of COVID's third wave, since the advanced estimates used information up to December of 21. We expect that maybe another 20 basis points may be shaved off, and we might clock a real GDP growth of 9%. This 9%, if you look at in a historical perspective, is significantly high growth, but it is dependent on the contraction that happened last year. In fact, if we compare in terms of the magnitude of GDP, we would be only marginally ahead of our real GDP in FY20, which means that we are going to start FY23 on a new slate. This is where we have to really now put our effort in terms of supporting growth. Now, for supporting growth, we have to take into account also the fact that inflation is also under pressure. In fact, both CPI and WPI inflation rates show significantly high levels, but WPI is leading the CPI by a significant margin. In fact, if we consider half-yearly growth rates in the first half of FY22, WPI has exceeded 11%, whereas CPI is just touching 6%, just below that. That difference actually leads to a significant surge in what we call implicit price-based deflator inflation. That accounts for the difference between nominal GDP and real GDP. In fact, nominal GDP is about 7.8% in FY22, much higher than the 9.2% of the real GDP. That difference is accounted for because of the high IPD-based inflation rate. So inflation is under pressure, and therefore government has to think in terms of using fiscal policy while supporting growth also to contain inflation. This actually leads to the issue of determining a suitable level of fiscal deficit for the next year, because fiscal support policies needed in order to support growth, but fiscal deficit cannot be kept at an excessively high level if inflation is also to be contained. I think this K-shaped recovery is probably a good description, and it is the outcome of the way COVID impacted the economy. In fact, many of the informal sector enterprises, medium and small scale enterprises have all been adversely affected by a significant margin, whereas many of the larger enterprises have recovered in a very significant way. As a result, an issue of unemployment has affected both the rural and urban sectors of the economy. The rural sector unemployment was partially mitigated by some fiscal support through Pradhan Mantri's food support Yojana and so on. But the urban sector has suffered very significantly. And because a massive amount of migratory labor depends on urban employment, there has been a significant increase, a temporary one though, in income inequality, and a number of people slided below the poverty line. That is a major policy issue. Now we can have two approaches. One, whether or not we should dilute growth by, say, raising the income tax rate at the higher end in order to deliver better equal income distribution in the system, or whether we should support growth through any strategy where capital expenditure is expanded. But there is also a support like the Rural Employment Guarantee Scheme, a counterpart of an urban employment guarantee scheme. That government has been reluctant to introduce so far because it says that it does not have appropriate data as to who are unemployed and so on in the urban areas, because there is a lot of migratory labor that characterizes urban employment. But I am sure that with considerable investment in information gathering and so on, this should not be a difficult task for the government. But this would only be a marginal relief in the sense that it would not address the inequality problem in a significant way, but it would moderate the excessive poverty incidents induced by COVID. That is one short-term way out. Well, in my view, there is a major job crisis, and the stock of unemployment is going to rise as the working age population of India continues to rise at an accelerated pace in the next 10 years. In fact, India's working age population is expected to become the largest in terms of magnitude, overtaking that of China by 2028. So the jobs crisis is going to become even bigger as we go along, both for specialized jobs and jobs for the broader spectrum. And for that, in my view, there is a change that is required, a significant change in the overall growth and employment strategy of the government. So far, government has been emphasizing Make in India focused on the manufacturing sector. Manufacturing sector, I was arguing earlier, requires a capital output ratio which is in excess of 6 to 7%. 6 to 7 multiple 6 or 7% increase in capital gives us one additional point of growth rate. Services, this is still 3 to 4. Our saving rate is not likely to get uplifted much beyond 5% or so, even if we do well. And therefore, in order to make our output growth more employment oriented, we have to re-emphasize service sector growth once again, which will enable us to provide employment opportunities at a much larger scale. So far, apart from Make in India, government has been also heavily oriented towards the agricultural sector. Now, if you look at the share of agricultural output in total output, it has been falling over time. In the early 50s, the share was about 55 to 60%. This has fallen to about 15% now. Our projections are that the share of agriculture would fall to about 5 to 6%. Productive job creation in the agricultural sector is going to be extremely limited. Productive job creation in the manufacturing sector and much more than that in the services sector is going to be there. Manufacturing, there is excess capacity globally. India cannot export much of its Make in India out because the kind of competition that is there. European countries have excess capacity, China has excess capacity, US has excess capacity. So we will find it very difficult to make a dent as far as the global markets are concerned. But services, we have a comparative advantage. So we have to move away from agriculture, which will not create jobs, productive jobs. And we have to move away from manufacturing, which will require very high amount of investment. And we have to focus more on services, where our comparative advantage lies. That kind of shift will only solve our employment Well, for the FY23 budget, I would say support growth, but signal that you intend to contain inflation by signaling return to fiscal consolidation. That is one. Second, the national infrastructure pipeline should be reassessed and a midterm assessment should be spelled out in the budget. Third, the national monetization pipeline, which relates to the non-tax revenues, they should extend it to cover land assets, because that is not part of the national monetization. But government is sitting on a massive amount of investment into land, which is not yielding any return. And in fact, that's an essential part of the monetization. Fourth, for the contact-intensive sector and urban counterpart to MNREGA. Fifth, evolve a medium-term counter-COVID strategy. Sixth, and this is a longer term, we can spell out in the FY23 budget, employment strategies, and while maintaining Atmanirbhar, a shift towards services, without saying that we are underplaying either agriculture or